We are seeing a wicked sell-off with AMC stock today, down about 4% in regular trading, now down 0.45% in after-hours trading. We all know the manipulation that is going on, but what I want you guys to know, and this is not part of the main video, is that we ultimately dictate the price as long as we hold on to our legal shares. It doesn't matter what happens in the near term. This is all a long-term game. But in this video, I directly want to go over the AMC NFT dividend situation because I think this is huge for AMC. I think overall, it will grow the business and really grow the multiple for how you value AMC. So I want to get into that specifically, as well as go over some broad market events that are going on. We're looking at the possibility for a government shutdown, as well as this debt ceiling situation that are coming both at the end of September in the beginning of October. So I do want to go over these very important situations that will ultimately cause the shorts to cover if we do see a crash or a correction. And we will explain that a little bit more, as well as some other things you guys need to know. But when I do talk about a possible crash or correction, I'm not talking about tomorrow, or I should say Monday, or even next week. I'm talking about really in the next 3 to 6 months. It is inevitable in my opinion. I would like to know what your guys' opinions are on this topic. When I have people coming to me in my real life talking about they're waiting to buy the markets because it looks like it's going to go through a crash or correction, that is probably a good sign that other investors think that way as well. So let me know your opinions down below in the comment section, and let's get straight into all of this key information. So let's first off start with the interview from Melissa Lee and Adam Aaron, where he did expose the AMC NFT dividend situation. So let's play that right now.
CEO Adam Aaron just last week about potential new revenue streams, his plans for the future. Take a listen to what he told me.
There are some ideas that have surfaced, which I think could create real value for AMC. One of the ones that I particularly love, which I haven't commented on before publicly, is to make commemorative movie tickets as an NFT. And that's a really smart idea. That's a really smart idea because we probably pay 50 to 100 big movies a year. Could we make 50 to 100 NFT commemorative tickets that mean something to people and mean something to us, that could drive our business going forward? I think the answer is yes.
NFTs now accepting more than just Bitcoin, but also Ethereum, Litecoin, Bitcoin Cash guy, showing sports, video game tie-ups. I mean, he's open-minded.
That is all you guys really need to know from that. That is the main thing that was actually said, and a lot of people are very excited about this. They are interpreting this like a possible NFT dividend, and really what I do expect to happen from this is exactly like he said. If it actually does happen, is for tickets to come with these NFTs. It's not exactly sure how they will implement this. Usually NFTs, obviously they're done on the blockchain technology. So if they're using cryptos in general, they could obviously, encourage people to use crypto for their ticket sales and also get an NFT. I think that would be a huge deal. Also drive sales, but even more important than that is due to the fact that more innovation at a company is going to mean a higher multiple, a higher justifiable valuation for AMC. And some people think fundamentals don't matter, and I'm really sick of hearing that, because fundamentals, they do matter. Not really in the sense of the short squeeze. It doesn't matter what the company is doing if the shorts are going to be forced to cover or not. Simply put, they're not going to be anyways, at least not the big shorts that we need to cover to send AMC stock home to thousands of dollars per share until their portfolio values go down, and then they are called up by the brokers and forced to cover. But ultimately, fundamentals do matter. If AMC stock was worth, $50 book value, would we be trading at about $43, $44 per share? Probably not. We would be consistently trading over $50 per share. That is just an extreme example to give you guys. That just means less potential downside if the short squeeze trade didn't work out overall. That is the way investors would look at this. A hedge fund or institutional investor that was like, hey, AMC is doing a lot for their business. They got this potential short squeeze on the table. Is it worth doing the cost analysis, the risk profile for AMC? If AMC could go to $1,000 per share with a short squeeze, that is certainly possible. If AMC could drop back down to $20 or $30 per share, or if the fundamental valuation was $40 or $50 per share and AMC was trading at 44, they would be much more inclined to buy the stock, and you'd see a lot more bullish activity. So that is why fundamentals do matter. But also, just to put this into a good perspective, let's say AMC does $100 million of revenue. They are roughly the same business as something like Netflix. Netflix. A little bit different. Netflix obviously subscription based, but AMC does have that recurring revenue as well, where people just go to the movies. That's what happens. But if Netflix makes $100 million of revenue, their $100 million is valued much higher than AMC's $100 million of revenue, because people price in, the marketplace has priced in more future growth for Netflix. So the more AMC does do to innovate, the more future growth that will be priced into the stock. Ultimately, long story short, just meaning the stock price will go up in value. And that is why the innovation at AMC, growing revenue, the fundamental valuation is important for AMC as a business, and the potential short squeeze. And every time new innovation does come out and is announced and actually implemented in the business, that is just crushing the short thesis for AMC a little bit more every single time, while also raising the bar on the fundamental valuation a little bit more. So hopefully everybody that heard that is clear on why the fundamentals do matter. I apologize for that fast rant. I wanted to get all that off my chest without taking too much of this video up just to do that. So let me know down below if that didn't make sense to you guys. I will clarify that in another video if need be. But let's talk about this other situation that is going on in the overall stock market. And this is really big. So the debt ceiling versus government shutdown, how they're different and why they matter. So we are facing both of these events by the end of this month and in the month of October. And one of these is very bad. One of these is actually not so bad. And the one that is not so bad is a government shutdown. So the federal government's fiscal calendar runs from October 1st to September 30th, meaning a shutdown will occur if lawmakers don't pass a budget by the end of the month. And I guess why this isn't so bad is probably because the market is, figuring we're not paying people. Government employees aren't getting paid. The military is not getting paid. All these things are not being funded. So that is probably not a bad thing for the country. And just to be specific, give you guys the data on this, 18 government shutdowns have happened from 1976 to 2013, and this study found that shutdowns have remarkably little impact on performance, as the median change in the S&P 500 was 0.0%. So literally zero change in the overall stock market. The debt ceiling, on the other hand, is a pretty bad thing. We are looking at the possibility of, obviously, the U.S. would default on its obligations to all treasury bond holders, and that is not a good thing. But they risk also missing Social Security and payments to the military. So definitely not a good thing overall. Way less common than actually seeing a government shutdown. Usually they just kick the can down the road, agree to something. So we'll have to see how that does play out. That could definitely be a negative thing for the markets. We are already seeing a lot of negatives for the markets as we do currently speak. The Evergrande situation in China is becoming increasingly more unstable. And if you guys are unaware of that, they are basically a property management group that is about to go under. They have $305 billion worth of debt. What you guys need to know is Lehman Brothers. If you've ever seen the movie The Big Short, if you haven't, if you were investing age around 2008, Lehman Brothers, when they went under, they had $610 billion worth of liabilities, and they helped start to kickstart the global financial crisis. So you're looking at about half the size of Lehman Brothers, a business that could potentially go straight underwater. So that is not going to be good. Have a trickle down effect into the overall economy. But at the same time, you're seeing those two Fed chairs that are actually selling out of all of their stocks, putting them into passive incomes after essentially buying the dip in 2020. Now it looks to be like they are even getting pretty fearful, citing ethics concerns, but they have not broke any ethics rules. So those are also two big things to really know and have an understanding of. But also at the same time as that, we are seeing the banks reserve requirement ratios, they are going into effect on October 1st. That is over $1 trillion of liquidity that will most likely, more than likely, come from the stock market. Draw that liquidity out to put it back into their reserve. So those are three big things. But at the same time of that, on a technical basis, the markets are choppy. There's fearful in the water. The UVXY is ripping, guys. And this is the 50-day moving average. This is what all analysts have been watching for, since this has been our support level throughout all of 2021. Since we did pass this November 3rd of 2020, we have not significantly went under this 50-day moving average. But besides two candlesticks right here and two days we did close under it. But you see 1, 2, 3, 4, 5, 6, 7, 8, 9. Now we're on our 10th touch basically one per month is our average so far, because we're going into October here soon. But we actually did close under this today, and this level is at $442.72 on the S&P 500 index fund. We did close at $441.40 per share. So if we do gap under this and don't get that bounce like we have seen throughout all of 2021, then we are likely to see a continued sell-off, and you're going to see these trading algorithms start to kick in their stop losses, because that's how the trading algorithms work. They are programmed to buy stock. Let's say usually when we hit the 50-day moving average, that's why you see this sharp bounce every time we did see this. But if we do gap down under this, you're likely to see, like I said, those stop losses kick in, and for these trading algorithms to start selling off their stocks, which could lead to this crash or correction, which will ultimately force the shorts of AMC, or really a lot of other stocks as well, to cover on their positions. So that is really what you guys need to know out of this video. Hopefully you guys got some value across all different spectrums of information in this video. Also, if you guys want to help support Madison, this is a girl I was talking to, if you guys know what I mean. She was in a bad car crash. They rolled like 10-12 times. The passenger was killed instantly. She was ejected from the car. The goal is $2,000. They actually just raised it, but nevertheless, this is her situation. Just found out she had a couple strokes too, probably during the surgery, or when the event actually happened. But it's going to be a long road to recovery. Hopefully make a full recovery, but you never really do know. So if you guys want to donate to that or just say a prayer, link is in the pinned top comment. Kind of hard to talk about, so please excuse me for that. But that is pretty much all for this video, guys. Check out the other links linked down below as well. If you guys want to support the channel by getting free stock with Public or free stock with Webull, I do greatly appreciate it. As well as that, we're going to be starting a brand new series of videos, I should say, where we're going to be starting a portfolio with $500, be making strategic investments as far as probably options. I will use shares as well, but try to grow that $500 initial investment without depositing any more money into $10,000. I really want to show you guys that you can grow a small amount of money. It may not be within a month. It may take a year to go from $500 to $10,000. There's really no time frame, but taking precise and calculated risk with small amounts of money to turn that into a very large amount of money. I have personally done this with portfolios of mine, so I want to bring this information to you guys. But if you guys want to be notified when those trades actually do happen in real time, check out the link in the description for the buy and sell alerts. You guys will be notified every time a trade is bought or sold in real time for stock, options, and crypto, as well as my long-term investments. So with all of that being said, guys, I hope you guys enjoy your weekend, and I will see you in the next video.